Hey, good afternoon and happy St. Patrick's Day to everybody out there. This is Pat from alphahorn.com providing our weekly update for the weekend in March 15, 2019. Hey, what I want to start with today is a look at the weekly S&P chart as it looked at when we headed into this week. This does not show the candle for this past week, but this big red engulfing candle is what we had to start the week with. And listen, to most people out there heading into the week, they were quite bearish on this week, as you would imagine they would be if this is the only thing they had to go by, this giant red engulfing candle, which was pretty ominous looking. It fed into a lot of people's view that this is a bear market rally that we've been experiencing for all of this year thus far, and whether or not that's true or not remains to be seen. This is a close-up of my big picture wave count, and right now as I count the waves up from the beginning of Super Cycle 3, which began back in March 2009, I have the question I have in front of me is whether or not primary wave 4 of cycle wave 1 has completed or not. There's a chance we saw an ABC down to complete that at 2346 toward the end of 2018. Alternatively, we could be in a flat in which that ABC was just intermediate wave A of primary wave 4, and what we've been experiencing for 2019 is indeed the bear market bounce in intermediate wave B, and we still need a 5-wave impulsive move down in intermediate wave C to complete primary wave 4, the target of which would be the logical target for most primary wave 4s, and that's the wave 4 of lesser degree intermediate wave 4 low, which would take the S&P below 1900 SPX, just below 1900. Ultimately, what I'm looking for is a primary wave 5 target of 3175. Whether that happens in the relatively near future or not until after we have a pretty significant pullback to complete primary wave 4 remains to be seen. Really won't affect our trading. We trade what's in front of us, and the system's been pretty correct so far this year. If you look at the AlphaHorn proprietary swing system and what it's been suggesting, for those of you who haven't seen this swing system before, you can search AlphaHorn on YouTube, and there is a tutorial video where I kind of walk through all the different elements of my system. In essence, what my system does is it provides sell and buy signals. My candles are either red, green, or yellow, and each candle is made up of a couple different indicators. And when both indicators are bullish, the candle's green. When they're both bearish, the candle's red, and when they're split, it's yellow, showing it's kind of a transitional period. Also, the background is gray for bearish, it's white for bullish. And once again, just search YouTube and look at the tutorial if you want more information about how this system works. But in essence, toward the end of December, we obviously were on the sell side and rode that wave down for a nice profit. On December 26th, we saw a transitional candle printed for the S&P, which was followed up by a green candle, which triggered a buy/long alert for the system. That was confirmed with a close above the high of that candle on December 31st. So we entered 2019 on the long side of the trade, and that has been the proper side of the trade for all of 2019 thus far. And as you can see, my system remains solidly bullish. It is a green candle with a white background. No signs of even a short alert at this point. So any trades to the opposite of that from my portfolio perspective would be viewed as risky. With that in mind, we are taking the more risky trade this week. If you look at the close-up view of my wave count, I think this counts better as 5 waves going up than it does 3 waves. The 5 waves fits into the blue count intermediate wave 1. You can force a 3-wave count onto this if you want for wave B per the red count. Once again, the blue count is the one that presumes that primary wave 4 is in the books, and we're on our way up to 3175, which we made up of 5 intermediate waves. I have intermediate wave 1 concluding and intermediate wave 2 due over the next week or so. And so that's what I have positioned the portfolio to take advantage of. Once again, my system says not so fast, but occasionally I will trade against it if I'm seeing some negative divergence on the 30 and 60 minute charts, which we're having here. So a bit of a high risk trade, but we have shifted to the short side for this week. We're looking for a pullback in either intermediate wave 2, or if the red count turns out to be correct, it could be a quite impulsive move down, as we have a 5-wave move coming for intermediate wave C on the red count. So both of my counts are once again looking for a pullback, just like they were looking for a push up last week. So with that in mind, we're going to have some tight stops. We're going to look to see if the system does confirm it in a day or two with a pullback this week. Otherwise, we're going to have to take our losses on these trades and switch over to the long side per the system. We'll come back next week and we'll recap, see how these trades unfolded. If you like it and you want me to do more of these types of videos, please let me know. Give me a thumbs up or leave me a comment down below. And I hope everybody has a very profitable week of trading and enjoy St. Patrick's Day. See you soon.